The PSEi is up last week following our best case scenario. Let's see where the market's headed this week. My name is Dan Slim and welcome to another episode of Monday Market Outlook. The most awaited economic number this week was announced last Friday. I did mention last week that while consensus was at 3.9%, my calculations peg inflation rate at 3.7%. True enough, inflation data eased for the first time since March this year back to the 3.7% level, while on a year-to-date basis, our inflation read is still at a healthy level of 3.5%. Earlier this week, manufacturing numbers came in at 51.3, signaling 10 straight months of manufacturing growth. Remember, anything above 50 means an expansion. So, the reaction to the Philippine 10-year yield, it broke support convincingly, most likely headed towards 6.42 or even 6.32. Perhaps this was in anticipation of a very high likelihood for an August rate cut, especially after the Friday inflation read. Further helping the markets could possibly be the bilateral discussions between China and Philippines after maritime tensions at the West Philippine Sea, or as Bloomberg calls it, the South China Sea. Some market movers last Friday, SM, BPI, BDO, and JFC helping drive the index, while ICT giving back some of its gains last Friday, along with AEV, JGS, and Metro Bank. Among the top foreign bought issues, we have BDO and SM. C-led stock seems to be the current favorites. BDO with a net buying of 154 million, while Ayala stocks continue their sell-off. So I guess SM wins this round for now. Looking at the weekly heat map, again, we can clearly see SM stocks continuing to dominate this week, while the Ayala stocks in limbo, AC, Ali, and Globe, basically going nowhere. Monde and JFC, consumer stocks springing back to life. ICT, despite the sell-off last Friday, still strong on the weeklies. Overall, though, it seems that net foreign selling continues to improve year on year. So far, the first half of 2024, we've had a net foreign selling of only 238 million. May's net foreign selling was bad enough. If we look at previous years, it turns out it was actually worse. So far, first half of 2024, 238 million, not so bad. If we continue at this pace, we will reduce net foreign selling in half by 2024. So far, stocks on the right, which bore the brunt of this exodus, may present some buying opportunities. Now remember, there's nothing has changed fundamentally with these companies. Their earnings are still doing great. To be honest, their price levels right now are quite irrational. So possibly some good opportunities here. Let's look at the PSEi charts. The index continuing its rally back to 6,500 before retreating on Friday. We mentioned last week that the best case scenario would be a continuation to 6.5. We even drew these lines and then retest the 6,500 support with the shooting star doji here last Friday. Though it seems like we are going to head toward 6,400, at which point we see if the market can hold this level and bounce back. So what's at 6,500? Previously, this was the 20 EMA. But now, 6,500 is where the 100 and the 200-day EMA converges. And this one, of course, is a demand zone. And if we draw a Fibonacci chart here, this, you can see, also corresponds to the 0.32 level. So very strong resistances. Lots of things going on at the 6,500 level. So it's just natural for it to encounter some resistance here. The market may need to collect a bit more steam to help break out of this. And of course, the retrace back to 6,400 would correspond to the 20-day EMA and the 6,400 support for a possible mean reversion to collect more steam. So let's look at some index movers and how these stocks will react to the possible PSEi movement. AC losing the conglomerate battle with SM for now, hanging on to dear life at 568. Look at the resistances stacked against it. They really need a strong catalyst to help break out here. In contrast, SM able to defend 800 zone twice. And if the scenario is for the PSEi to pull back, maybe we could get a triple bottom for SM, and it will give us another chance to buy close to 800 and hopefully break out of 850 soon. Meanwhile, AEV, one of the most hated stocks by foreign investors, needs to defend 37 and try to make a comeback to 39. Let's see what happens at that level. The battle of the property stocks, Ali versus SMPH. Ali, major resistance here, 200-day EMA, 100 EMA plus a demand zone. We'll see how it reacts this week. SMPH racing back to 2950, but not before encountering this resistance. Moving average here. Who will win this race this week? We'll see. A triple bottom here. Could this be the time to shine for SMPH? Meanwhile, RCR, classic move, breakout, retest, support, bounce. Congratulations if you were able to get RCR on the bounce, but we've been talking about RCR for a long time now. We were already accumulating at 496. Again, congratulations. Battle of the banks. BDO, most likely a consolidation might happen here. This is a choppy level, but look at these candles. Let's try to break through 140. Hopefully, 143 will be our next destination for BDO. It might replicate how BPI did it. Strong candles here and then a consolidation. Let's see if it is able to bounce back to 125. Metrobank, always the laggard among these three banks. Look out for the 64 level. See its reaction. Best case scenario, it consolidates just here at 65 and then rally back to 68. Now ICT, a breakout and then a retest of 360. If it bounces back up, then 390 would be the price target. If it breaks down, maybe this is a false breakout, and 350 or 340 would be the next level to watch out for. Limited upside though for ICT right now because the consensus target is at 390. I would say this is a hold. JFC, maybe they should keep on buying more coffee shops as it breaks out from this consolidation pattern here. Let's try for 240, but not until we can clear this 200 EMA though. It may consolidate again this week, similar to this pattern, before continuing to 240. Monde is caught between two averages, right? You have the 200 EMA and the 20-day EMA. Shooting star doji could mean a double bottom potential. 940 is a good buy zone for Monde. Let's look at some non-index issues. AP, 32.95 at this point. It's giving out a 7.5% dividend yield. Not so bad based on the 230 dividend yield last March. The next dividend will be next March. So ease in slowly. A lot of things can still happen. Manila Water trying to break out of 28. This is a good level to probably buy. 32.60 will be our price target. If this is an upside that you're comfortable with, go ahead and pull the trigger. Otherwise, it's a hold. Some strong issues from the Ayala group actually. ASEN seems to have formed a double bottom here. Watch, if it breaks out of 5 pesos, 550 will be the next target level. Globe doing quite well. We haven't covered Globe for a long time. I remember some of our viewers were buying Globe at 1,900. If you were patient enough to hold Globe all this time, congratulations, you are now at 2,100. The consensus for Globe is around 2,300. So it might be too late to enter. Watch out for 2,300 and see how Globe reacts at those levels. Now on to the global markets. The US economy is in big trouble as the ADP payrolls report came in worse than expected. 150,000 jobs versus the 160,000 expectation. Also, services PMI numbers falling to its lowest levels since the pandemic. Then US factory orders unexpectedly fall in May, dropping 0.5% after rising 0.4% in April. Then on Friday, the most anticipated unemployment report ticked up 4.1% from the 4% reading last month. This puts the unemployment rate on its fourth straight monthly increase since February. And while the non-farm payrolls report came in at 206,000, hotter than expected, it was the revisions that caught people by surprise. April jobs report was revised down 108 from 165. May's jobs report was revised from 272 down to 190,000. So what does this mean? That they've been over-reporting these numbers for the past 2 months. Who is to say that 206,000 is also an exaggerated figure? So you would think that there would be panic in the streets, but no. The Fed is celebrating these numbers as these numbers have put them back on track for a September rate cut. The target rate probabilities ticked up 72%, where this was just a 57.9% a week ago. So this puts the US on track to follow the increasing number of central banks who will start easing by December of this year, as we are predicting that 80% of global central banks would be in easing mode by the end of 2024. So far, the S&P 500 still trying to price in 3 rate cuts this year as we continue to see signs of weakness in the US economy. And while China and the Philippines back on the negotiating table trying to iron out our differences here, the tension in the Middle East continues to escalate as the latest round of tensions have caused the US oil and Brent crude back into critical zones. And you know, there's still a lot of time between today and the August BSP and the September Fed rate cuts. The markets may go up and down based on geopolitical risk and the economic numbers to be announced along the way. So let's look at the S&P 500 charts. The market celebrated all of these bad economic data with an all-time high again. And the higher this market goes, the more people are saying that the end is near, but the market still keeps churning higher. And as the 5,450 support held last week, the market continues to grind higher, closing the week at 5,568. Now, let me show you something interesting here. Now, sometimes when we talk about mean reversion, we expect the markets to pull back, rally, pull back, rally. Similar to it pulls back and it rallies. No? But this time around, the market did a mean reversion differently. It did a pullback in time. So basically, the market simply drifted, consolidated along this area until it reached a point where it was close enough to the 20-day EMA to rally back into new all-time highs. So driving this rally really is the Mag 7 stocks led by Meta last Friday. So we are back into a very concentrated market. Will we be able to continue this rally coming into this week? Let's look at the economic calendar for this week. As we mentioned, the economic data might be the key to the market's movement moving forward. This week, Philippine unemployment rate will be announced on Tuesday morning, while the inflation read for the US will be announced on Thursday. And the expectation is for inflation to go down again to 3.1%. So will the markets remain steady until Thursday, or will new updates on the Biden situation be enough to move the markets? Maybe as of now, the market, I think, has priced in a possible Trump victory unless we really see what the Democrats and the Biden team will do to win the voters' confidence back. So we'll see. That's it for this week. Please like this video if you found the information useful. Please subscribe to the channel for more updates. And again, good luck on your trades. Please manage your risks accordingly. And I'll see you again next week. Bye-bye.